In our first FB Live video, we will start with compensation and benefits. In one of the earlier video, we talked about very basics of compensation and benefits, where we talked about how a CTC is brought into different parts. And what we talked about is, if I see CTC is basically brought into FIXED fixed component of that. Second is the variable component of that, and third is the benefit components of that, which is basically the statutory compliances in most of the time. And the last part, which I normally say is part of the performance management itself, but it is more like the bonus which will be paid on annual basis. So these are the things we have already spoke in our last video. So this time we will not focus on that. We will take you through how actually a salary breakup is designed. So we always talk about basic HRA, transport allowance. So I will keep our discussion today mainly on how to create a salary breakup, and you are most welcome to ask any question in between if you want to ask. You can raise your hands and let me know, and I'll try to answer that. So let's talk about each component one by one. So when we talk about salary breakup is like, you must have heard a word called basic. You must have heard a word called HRA. You must have heard a word called transport allowance. And a word called CCA, which is basically a city compensatory allowance. And then something called spatial allowance. So these are the 5 mostly heard components when you start creating a salary breakup, and when you club all of them together, it becomes your gross salary. So let's talk about one by one. What does a basic means actually? What does a HRA means actually? And what are things we need to keep in mind while we are making a salary breakup of a particular amount? So let me talk about the basic part first. A basic is basically a basic salary. So for example, if somebody says, I want to give a salary of 30,000 rupees to someone, the question comes, how do I break that salary into these components? So it is basically, when you know about all those components, you will be able to have your own ideas that how you would like to break it, and what is the process and system you want to create to break that particular salary into salary breakup. Normally, when we talk about basic, we say, if we have to make, example, if you have to give a 50,000 rupees salary to someone, you should ideally keep 50% of that as the basic. There is no rule for that. As a company, you can keep 30% also as a basic, that's not a problem. But generally, it should be 50% or 40%. So 40 to 50% is a practice. So as I said, I'll say again, there is no rule for that, but it is basically a practice which follows. So for example, if somebody's salary is 50,000 rupees and you want to keep even the 40% as a basic, then you need to keep 20,000 of that is as a basic. Now there's a twist to it. The twist to it is that when we are talking about the higher number of salaries, this looks fine. When we are talking about a smaller salaries, especially salaries which fall in the preview of minimum wage. Now, in that case, we should keep in mind that our basic salary should not go beyond that minimum wage of the state. We should always try to keep the minimum wage as a basic salary. Now I'll give you another example for that. Another example is, let's say if you want to give somebody 15,000 rupees as gross or as CTC, and if you use this formula, then the 40% of 15,000 is 6,000. But let's say this is the 40%. But let's say you are in Delhi. So, and this category, if you're in Delhi, I'm just taking a figure. For that category, the minimum wage is 10,000 rupees. In that case, you will choose 10,000 rupees as the basic salary for that particular person. So, here we go. So, in that case, you will keep 10%. You will keep 10,000 rupees as the basic salary of the person, not 6,000 rupees. So, in other words, if I say 50% or 40% or minimum wage, whichever is higher, should be the basic salary of that particular person. Now, in terms of, let's move on to the next one called HRA. So, HRA is basically, as the name suggests, is house rent allowance. Oh, before that, do you have any questions on basics? What are the things we should keep in mind? Is there any question on basic salary? Anyone? Huh? Good, good. So let's move on to a house rent allowance. Ideally, this component means that we are giving this particular salary, this particular allowance to an employee for taking a house rent in nearby area or paying for the house rent of that particular employee. This is one of the allowance which has been given to the employee. Now, question comes, what are things we should keep in mind when we are putting some figure in house rent? Now, again the question, there is no really, it is 50% of basic. So, in our earlier example, when we took basic as 20,000 rupees, the HRA should be of the basic, which means 10,000 rupees should be the HRA. So that's a simple formula. But there is a connection between what should you keep as one of the HRA, because HRA is one of the component which has tax free into it. It can be a tax exempted component if the person is paying it. So let me put some more thoughts on HRA to make you understand better. Now here it is. First theory says it should be 50% of the basic. That's fine, clear. Now for the tax purpose, HRAs, for the tax purpose, if you want HRA to be tax exempted, there are three things which you have to keep in mind. One, what is the actual HRA paid? What is the actual HRA amount which is paid? Second is 50% or, in case this is 50% of basic, but that is in case of metro cities, 40% of basic, that is in case of non-metro cities, and third condition is what is the rent paid minus 10% of basic. Now, whatever is the amount which will come out of these three, the minimum will be kept in tax exemption. So, assuming, let's say an example, the actual HRA paid in this case is, let's say if we would have been paying 10,000 rupees, so we'll keep it as 10,000. Now, 50% of basic or 40% of basic in non-metro city, 50% of basic in case of metro cities. So let's say we are in metro city, so the 50% of basic is also 10,000 because the basic is 20. Assuming this person is paying a rent of 14,000 rupees, let's assume that. So the rent paid is 14,000. Now, what is the basic we have? 20,000. 10% of 20,000 is 2,000, meaning we need to deduct 2,000 rupees from here. So the total amount is 12,000 rupees. So that means the amount which will come from here is 10,000, 12,000. So this is first figure, this is second, this is third. It says the minimum of all those three, which is again 10,000. A person can get exemption on this amount. Now this was a very clear-cut example, but we can take another example to understand it better, and then maybe I would like to take your questions if you have any. Alright. Another example is, assume there is a person whose base rupees. He stays in Delhi and pays a rent of 12,000 rupees per month. Let's say this is the example. Now let's see what happens. What is the tax exemption that particular person will get? First, actual KRA paid. What is the actual KRA we are paying to him? 6,000 rupees. He lives in Delhi. That means we will take 50% of the basic. What is 50% of the basic? 7,000. Rent paid minus 10% of the basic. The rent he pays is 12,000 rupees minus 10% of the basic, which is 1,400, comes out to be 10,000. No, sorry, it's going to be 10,600. What is the minimum of all these three? 6,000. So he will get a tax exemption on 6,000. But did you notice something here?
He could have got that exemption on 7,000.
Yes, he could have got exemption on 7,000, but because of the poor salary structure, which is 6,000 rupees, he actually got an exemption on 6,000. We could have easily made his, if you would have made it 7,000 rupees, for example, the HRA would have been 7,000, then this figure should have been 7,000 itself, and the exemption would have been on 7,000. That means the way you structure a salary also put an impact on what is the tax exemption you get, and that's the reason having a good salary breakup is very important. Now let's move on from HRA to another component called transport allowance. Any questions on HRA?
If somebody is paying HRA, then he get the allowance. Like if somebody is not paying rent.
Oh, that's a good question. So let's say if somebody is not paying a rent, then remember the third portion where it says rent paid minus 10%? So there will be 0. So that means, yeah, but to answer your question straight, if somebody is not paying rent, he will still get the HRA from the employer, but he cannot get tax exemption because he is actually not spending that money. So tax exemption will only be given when you actually spend that money. That's a good question. Now there is another notification which has come that if you want a tax exemption and if your rent paid is more than 1 lakh rupees or 1 lakh rupees, you need to give a PAN of your landlord. So that is also, there are some check and balances which government keeps coming up from time to time. Alright, let's move to the next one. Is called transport allowance. It is sometimes also referred as conveyance allowance.
In HRA, I have one question. Is
Yeah.
there any capping on tax exemption on HRA?
No, there is no capping. This is the three law which is being followed. Three criteria which is being followed.
So I can get it 2 lakh, 3 lakh rupees exemption on,
Yeah,
depending
so-
on my rent paid and basic and HRA.
Yeah, so to answer your question in more detail, if you are earning, it's all depends. For example, if you are paying a rent of 20,000 rupees, or let's say another example. If I am living in a posh area in Noida and I am paying 40,000 rupees a rent, but my company give me 20,000 rupees only, then means I get exemption on 20. But my company is giving me 60,000 rupees as a HRA and I'm giving 40,000 rupees there. I have all the PAN number, everything. Yeah, you will be given tax exemption on that, for sure. So the only three criteria will be followed when a tax exemption is given. There is no capping as such. That's a good question. Okay, let's go to the transport allowance part of it. As I said, sometimes it is also referred as conveyance allowance. Now, this allowance is paid to an employee to come to the office and go back, to and fro, home and office. So, whatever way you use, you're using car or public transport or your bike, but that's the amount being given. Till last year, it was exempted till 800 rupees per month, but now it has been increased to 1600 per month. Meaning, if you are giving somebody a 1600 rupees amount per month, it is tax free. But if you are paying somebody more than 1600 rupees per month, what will happen? So, let's say assuming if I am paying somebody 2000 rupees as transport allowance. So what will happen is that till 1600 rupees it will be tax free. Over and above 1600, which means 400 rupees will be a taxable income. So the employee has to pay tax on that. Now, so it is advised that if you have amount to put here, put it to maximum of 1600 rupees, not more than that. So when you put more than that, like we took an example of 2000, we put 2000 rupees here because we have money to put here in a salary breakup, nothing will happen. But it shows your understanding about the salary structure. So practically it should not be, it's like poor practice. You can take it that way. So nobody is stopping you to put 2000 rupees here, but it will be as a poor practice that you don't know, like, you know, it is not taxable. Then what's the use of it? But you can put that. For example, company says, I want to give 3000 rupees somebody to come and to and fro to office. Yes, you can do that. No problem. You can put 3000 rupees here because your company policy says so. Then it's fine. But still, till 1600 rupees is only tax free. Any other questions on that? That's the easiest one. So transport allowance is the easiest one to talk about. Now, there is one more popular salary breakup which is called city compensatory allowance. I don't know how many companies are still using it, but this is one of the popular salary component. Now, what is the objective of city compensatory allowance? The objective of city compensatory allowance was basically to give or compensate a person to come to a particular city. I'll give you an example. But before giving an example, I'll show you most of the companies make some grid around it. For example, they say if they put a grade here. So let's say grade means the grade of the employee. So A grade employee or B grade employee or C grade employee as an example. And then they have cities. They can say we have these cities. We have Delhi, and let's say we have Indore and XYZ more cities. So they can define that if somebody is in Delhi, then he will get 2,000 rupees if he is an A grade person. If he is a B grade person, he gets 3,000. For C grade, he gets 4,000 as an example. In Indore, it can be, I'll give you 1,000 here, 2,000 here, and 3,000 here. Which means, because this is a company policy to basically compensate them to stay in a particular city. So what will happen is, if you are hiring a person on B grade in Indore, your city compensatory allowance will come out to be 2,000. It has nothing to do with any law. It is company policy. It is company way to actually compensate the employee for moving from one city to another city. Now, another example here is, if a company has multi-city, multi-location base, and they move one employee from one city to another city, they will surely gonna change this. For example, if a A grade person moves from Indore to Delhi, so once the person moves, the city compensatory allowance will increase by 1,000. And same, when the person goes back from Delhi to Indore, this will be decreased by 1,000. Because assuming that the cost of living in Indore is lower as compared to that Delhi as a city. So this is the purpose of city compensatory allowance. And one more thing, city compensatory allowance is a taxable component. Anything which you pay as city compensatory allowance is a taxable component. Now let's talk about a last component of a gross salary. But as I said, there could be many, but let's talk about the last in our series is basically called special allowance. Special allowance is nothing. It is just an adjustment component. So whatever is left in the salary breakup, you can put it here. So let's say an example, and then let's see how special allowance plays a role. For example, we are going for a gross salary of 50,000 rupees. Assume that. Our example is a gross of 50,000. We are supposed to pay somebody a gross of 50,000 rupees. So what we have learned right now, let's see how this fit in. And we are talking about this person in Delhi. So how much we will pay in basic? So, but we have taken 50% or 40%, but we are saying, for that matter, we can take 50%, right? So we are saying we'll pay 25,000 because our practice is that we pay 50% of the gross. This is our practice. You can define that practice yourself, right? You can also define that we'll pay 40%. So if your practice is that you pay 40% of your gross, in that case it will be. So you can define it. But I'm saying don't go below 40% because that's not what the practice is all about. We also talked about in case somebody is falling under minimum wage, then whichever is higher has to be here.
It can be 45% also.
It can be. It depends upon what is that you want to build as your company policy. Nobody will stop you from doing it. So it's your all company policy. And also remember, most of the benefits, statutory benefits, are paid on basics. Like your Provident Fund is on basic, your statutory bonus is on basic, your gratuity is on basic, leave encashment, depending, a lot of things are basic, and that's the reason basic salary plays an important role. So good question. Now let's move on to HRA. So if 20,000 rupees is the basic, what should be the HRA? Because it should be 50% of the basic. In case of transport allowance, we said let's not go more than 1,600 rupees. So put 1,600 rupees here. Assuming that this person into a particular grade, and we have to give something here, and it's an A grade in Delhi, so we put 2,000 rupees as city compensatory allowance. So whatever is left, so it's like 30, sorry,
16,400.
16,400. So 16,400 should be put in special allowance. And when you add all of them, it becomes your gross salary, which is 50,000. Now let's quickly see from income tax perspective what it is. From income tax perspective, basic is taxable. Anything which you pay as basic is taxable. In HRA, it is non-taxable, but with a star mark. First, your employer must be paying you HRA, number one. You should be paying a rent, number two. And then those three conditions. Whichever is minimum will be there. Transport allowance is non-taxable, but a maximum limit of 1600 rupees per month. City compulsory allowance is taxable. Special allowance is also taxable. Any questions till now?
If we are making more than 1600, that transport allowance.
This one? Yeah. So if you are making anything more than 1600, we can do so. Nobody is stopping us. So let's say, for example, you say, I don't want to give it as 1600, but I want to give it as 2000 rupees. That's all right. But the tax exemption that employee will get will be on 1600 rupees only. The rest 400 rupees will be taxable. So there's no problem giving more than 1600, but we have to keep in back of our mind that it will be a taxable income for it. That's all right. So as I was giving an example, that there are a few companies who says that I have a policy that I'll give this as a transport allowance. Sorry, I'm talking about transport allowance. So we can give as we should give more than 1600 rupees as a transport allowance. In that case, it becomes taxable. Any other questions on ground? This one? No, it is not. It is not compulsory to have city compensatory allowance. As I said, these all components. Maybe if you see other companies, you will find other components like child education allowance, like uniform allowance, like washing allowance, like medical allowance. But medical allowance is a wrong word. I'll come to it. It should be like medical reimbursement. The purpose defeats out there. So company can pay any. Company can give you attendance allowance. Company can give you any allowance they want to give you.
Books and periodicals also.
Sorry?
Books and periodicals.
Books and periodicals. But these, what I'm saying is, they can give you any allowance. They can give you sleeping allowance, no problem. But the point is, it will become taxable in your hand, at your hand, it will become taxable. So that's the only difference when it comes to salary breakup, taxable or non-taxable. All right. Any other questions? No? All right. So let's move to the next step, and let's move a little quick on that. Is your gross salary part is over. So, and we will come to the complete CTC structure of it, but let's go to the gross salary. So you know our gross salary. We just learned how to come to a gross salary, which we selected as 50,000 rupees, right? Now, there are occasions when you get paid some incentive also. Now, incentive are of multiple type. Incentive can be a monthly incentive. It can be an incentive paid on number of product or number of articles you have made in a manufacturing company. It can be on the basis of your annual turnover. So the incentive has a lot of different definitions. For this purpose or for this example, let's take example of monthly incentive which a person gets. So assuming in our example, we said ABC person will get an incentive of 4,000 rupees based on his performance. Now, who will decide his performance? Let's assume his manager will decide his performance. So every end of the month, manager says, I am happy with the performance and I want to give him 100%. He may say, I want to give him 80%. He may say, I want to give him 120%. So let's assume this monthly incentive. So a monthly incentive will be kept here and it will be said, let's say 5,000 rupees. Then the gross will become 55. The earlier gross will be called fixed gross and this gross will be called a gross. Because in earlier gross, everything was a fixed salary. There was nothing called variable, there was nothing, no incentive. But when you put it 5,000 rupees as incentive, which is not actually going to be paid on the basis of number of days you have come to the office, it is not on your attendance, but it is on your performance. Hence, it will be a performance incentive, and your gross will become 55. So you can also hear words like fixed gross or gross. Right. Now, this is the gross portion of it. So we talked about basic salary, we talked about HRA, we talked about transport allowance, city compensatory allowance, and medical we not talk about, and special allowance, and what is a gross. Then the next thing we talked about is incentive. If you have a monthly incentive, that should also be shown as a part of the gross, but then you have a fixed gross and a gross including monthly incentive. Now, the next portion is what are the contributions made by employer for an employee. So there are a lot of contribution which is being made by an employer. So let's talk about those contributions, and maybe I think we have enough space here. So let's talk about employer contributions. So we will not go much in the detail today on those because we can talk a lot about that. So we can have sessions on those contributions more in detail later on. So for example, in Provident Fund there are so many questions, in ESI there are so many questions, on bonus there are so many questions. So, but we will not go more in detail, but we will touch them on the top so that we can have our CTC breakup in place. So the first one is PF, which is basically Provident Fund. And everybody knows very well that the PF is basically 12% of basic. Now I'm not using a word basic plus DA here because I'm assuming DA is not there. In private companies we don't normally use word DA. But if there is a DA in the salary, then it is basic plus DA. But for the simplicity of this one, I'm saying basic. So it's gonna be 12% of the basic. So if my basic was 20,000 rupees as the example, then you can calculate what would be the basic. But now there is a capping in Provident Fund. So what is the maximum ceiling for Provident Fund?
18.
Now what is the ceiling? What is the amount? 15,000. So if the basic is 15,000 rupees or less, then it should be 12% of basic. But if it is more than 15,000, company has an option to cap it to 15,000. So what I'm trying to say is, let's say an example. Example 1. The basic is 7,000 rupees. Then the PF should be 12% of this, which is
840.
Sorry?
840.
840? Okay. So let's say example, this is what it is. But example 2, if the basic is 10,000 rupees, what will be the PF? 1,200. If 3, it is 15,000 rupees, then?
1800.
And if it is 20,000, then the organization has a choice. Till here, the company has no choice. They have to pay 12% of the basic. But if it is more than 15,000 rupees, which is the PF ceiling right nowadays, the organization has a choice either to cap it to the 15,000 rupees or they can pay on the total of 20,000 rupees as well. So I'm assuming the organization is willing to cap it to 15,000 rupees. So that means we have to pay 1,800 because 1,800 is the 12% of
15,000.
Even if the basic is 20,000 rupees, the organization decided to cap it on 15,000, which is absolutely legally okay. No problem with that. And the organization, or the government is now thinking also to raise the cap of PF from 15,000 to 21,000, but it is yet a talk and nothing has come out on this. So as I said, we will not go more into detailing of PF today because there are a lot of questions can come up, but still, if you have some question, I will be happy to answer. Any questions on PF, I will be happy to answer.
What is PF or what is UAN number?
Okay. UAN is basically, earlier what used to happen is that when you are in a particular company, a company used to give you a PF number. And that PF number used to be a company specific number. So company used to generate that PF number. So when you move from a company A to company B, they used to generate a different number for you. Then you go to company C, used to generate a different number for you. So what started happening is, it was very difficult to track a person. So like we have Aadhaar card now, you will have one Aadhaar card wherever you go. So the organization, the government decided that we should have one universal account number for every PF holder. So they have allocated a UAN number to each of the members. So if I'm going from a company A to company B, my UAN number will not change. Till the time in service, and if I have to refer Provident Fund, I will only use UAN number. But we will, yeah, so good question, and we'll talk about more when we have our own sessions on Provident Fund now. Any other questions on Provident Fund? Any other questions? All right. Let's go to the next part of it, is ESI. So ESI is basically more on gross salary and less on basic salary. So it is on gross salary. So what happens is, if the gross salary of any employee is less than or equal to 21,000 rupees, the person falls under ESI. Otherwise, the person is not under ESI. So in our example, what was our gross salary? So do you think this person is under ESI? And when I say gross salary, it means fixed gross salary and not the variable gross salary. Meaning the gross salary which does not have variable in it. Right? So in our case it is not, but let's assume if the gross salary of a person is less than 21,000 rupees, in that case the employer has to pay 4.75% of the gross salary as a contribution to the government. Employee has 1.75% of gross as a deduction, but right now we are talking about what are the contributions made by the employer. So it is 4.7% the contribution the employer make towards the gross salary. So any questions on ESI? I have an interesting situation in ESI, but as I said, when we talk about ESI, we'll talk about that. There's a very interesting, tricky situation in ESI. All right. The next part is gratuity. So, as you know, gratuity is basically a social security scheme, which is an obligation of employer to give to employees when employees complete 5 years of continuous service. So, what employer does is they actually make a accounting, I would say, or they keep it as one of the obligations. So they make accounting of it, that what if this situation comes, how much I have to pay for that. Sorry. Yeah. So that's a very technical, that's a very accounting word actually. So what they do is every end of the year they actually see what will be our obligation to pay to the liability, I would say, to pay to the employees. So as you know, gratuity is that if somebody completes 5 years of services, then for every year 15 days basic should be paid to the employer. Or in simple words, if you don't want to go to all this calculation, you can simply say it is 4.81% of basic. There is a logic how this 4.81% has also come, and this logic is absolutely based on what I just said. But to simplify your life, if you have to see a per month, this is a per month. If you have to say what will be the gratuity liability of a person per month, 4.8% of basic is a simple formula, straight, and you'll get your per month basic gratuity liability. So many people, as a couple of questions on gratuity is that people say, whether it is right to actually, for an employer, to put gratuity as a part of the CTC. The answer is yes or no both. It is employer choice. Because this is employer's liability, and employer wants to show it as a part of your CTC, that's fine. If it doesn't want to show it as a CTC, that's also fine. But it is basically employer's choice. There's nothing wrong in it to put here, so that's all employer choice. The only thing is, employer should make employee clear that it will be paid only when you complete 5 years of continuous service. Although one other thing is, gratuity is not only paid for completion of 5 years of services, but at the same time, something happens to the employee before 5 years of completion of services, this particular amount is paid to the family of the from family of the employee. So another question which I normally hear is that I have completed 3 years and there was a gratuity component in my CTC. Should I get that or not? The answer is no. You will not get it, because but the logic from the person who is asking the question is that it is a deduction in my salary. Why I should not get it? To answer it, it's not a deduction in your salary. Nobody is deducting it from salary. It is that the employer is showing what are the various components, what are the various expenses, or what are the various contributions I am giving on behalf of an employer, because that's the cost for the employer. All right. So what else? We have a lot of other components. In some cases, we have this LWF, but that depends from state to state. Some labor welfare fund. That's a very small amount, nothing to.
10 rupees one.
Yeah, nothing too much, but it depends from state to state. Let's say, for example, if an employer is giving you a uniform every 6 months, and the cost of that is, let's say, 5,000 rupees every 6 months. So, or let's say for a simple calculation, every 6 months when an employer gives you a uniform, the cost is 6,000 rupees. That means the per month cost will be 1,000. 6,000 rupees for every 6 months. So he can say, I am giving you a uniform. So uniform allowance or whatever is basically 1,000 rupees per month, because he feels it is an expense, which is actually right. What are the other things which can come here? I think we have
PF.
Yeah, Provident Fund admin part. Oh yeah. So basically, every employer has to pay some amount to government to maintain the Provident Fund there. So there are employers which is basically 1.61%.
Now 1.15.
Now 0.65%.
Now 1.15 total. PF and
Yeah,
DA line.
1.5?
1.15.
Oh, 1.15%. So this is also an employer which they can put it as a part of the CTC. What else can be part of the employer contribution? I'm just moving in. Oh yeah, we forgot to talk about statutory bonus. So statutory bonus is basically implemented by the law. It is not something which is a profit linked bonus or performance linked bonus, basically driven by. So what law says is that if your if your basic is what? Less than or equal to 21,000 rupees, again the basic, then you become eligible for bonus, which can be paid to you either at 8.33% or 20% maximum. That's the range. Minimum is 8.33% and maximum is 20%. That's the range in which you get your bonus. As I said, we will not talk more about it, but we'll just keep it to our discussion and we can have a separate discussion on bonus altogether. But if your basic is less than or equal to 20,000 rupees, you can say at least you will get 8.33%. But there is a capping, and this capping is on minimum wages or 7,000 rupees, whichever is higher. But you can see from that perspective, if you are staying in Delhi, it will be always on minimum wages. Meaning, let's take an example of that. Example is, if the basic salary of an employee is 15,000 rupees, that means that person becomes eligible for bonus. And he is in Delhi, and the minimum wage of Delhi is 10,000 rupees. And he is supposed to get 8.33% of the bonus. That means he will get 10,000 rupees multiplied with 8.33%, whatever comes, is his per month bonus. The bonus is not paid on basic, but it is capped on the minimum wage of the state. Should I mention it again? Although as I said, this is a little tricky, but in simple words, we can say is that first thing, whether the basic is more than 21 or less than 21. If the basic is more than 21, the person is not applicable for bonus. In that case, the bonus becomes zero, straight, no question, zero. But if the basic is less than 21,000 rupees or 21,000 rupees, that means you need to give that person a bonus. You need to register a bonus for that person every month. And you have to pay it later on. As I said, we'll talk about it. It is paid after the year is completed. You don't have to pay it every month to the person. But you have to register something in salary as a CTC. You can register as a bonus. What will be that amount? That amount ideally should be 8.33%. But it can be more or less. As I said, we'll not talk about it. But for our discussion, we can keep it as 8.33%. So 8.33% of what? 8.33% of basic? No. 8.33% of the minimum wage of the state or 7,000, whichever is higher. As I'm talking about Delhi and assuming Delhi's minimum wage is 10,000 rupees and it is higher than 7,000 rupees, which means it will be 8.33% of 10,000 rupees comes out to be. We'll talk more about it when we talk about bonus, but you can keep it in your mind. So these are the employer contributions which can be kept in mind when we are talking about CTC. There is something called employee deductions. What could be employee deductions? So one, the PF. Second is ESI. What else? Oh, these are very small amounts. Small FWF, professional tax, income tax, etc. So these are the deductions from employee. Gross salary. So Provident Fund is basically the 12% of basic. Same concept as I discussed earlier. ESI 1.7% of gross, provided the gross is less than 15,000. Oh, sorry, 21,000 rupees. Less than or equal to 21,000 rupees. LWF is state to state, very small amount. Some will get 1 rupee, some will get 10 rupees per quarter for 6 months. P-tax is also from state to state. It's a professional tax. This is a tax which the state takes. So every state has a professional tax. Not necessary, but they have differ. So Delhi doesn't have a state professional tax. Haryana doesn't have a professional tax. UP doesn't have a professional tax. So Maharashtra has a professional tax. So like these. So it's relevant for people who are
professional tax is not more than 2,500 per annum. in any state.
Alright. Income tax is depends from your income. So whatever has been deducted. So let's say this amount comes out. Example, if this amount comes out to be 10,000 rupees, the total deduction. Then if you reduce the employee deduction from your gross salary, you will get your in-hand salary. But if you remove this 10,000 rupees from your fixed gross, you will get fixed in-hand salary. If you deduct this 10,000 from 55, which is your including variable, that means your in-hand salary including variable. Example, the gross is 50,000, the fixed gross. The fixed gross is 50,000 rupees and my deductions are 10,000 rupees. So that means I'm going to get 40,000 rupees per month fixed salary. But if I take another example and I don't talk about fixed gross because I've also been paid 5,000 rupees as a variable, then this gross becomes 55 and this in hand becomes 45, which also includes 5,000 rupees as a variable.
So variable in fixed gross, variable in gross salary.
Sorry. Do we include variable in the gross salary? That's the question. We do include variables in the gross salary, but only those variables which are paid on monthly basis or quarterly basis, not the variables which are paid on annual basis. The variable which is paid on annual basis are being put into employer contribution, or not employer contribution but annual benefit.
Annual benefit.
What is the concept of variable gross?
The concept of variable gross is, we talked about a fixed gross earlier, right? And we said this is absolutely based on the attendance which we have. But let's say an employee is getting a 5,000 rupees monthly incentive for his performance. And if I add this gross and the variable, then it becomes a gross salary which has variable as well. That's the concept. Now there are other benefits also which employer pays to an employee. These are not employer contributions, but these are benefits. And mostly the objective of these benefits are two. One, to make it a tax-free income for the person, or second, to retain the person for longer time. Example, we talked about, so I'm talking about benefits now. The benefits, how do you calculate these benefits? One, medical reimbursement. Medical reimbursement is basically is allowed from the income tax perspective. 15,000 rupees a year is tax free. So meaning medical reimbursement can be paid to an employee for looking after his and his family's medical needs. For example, you paid for a medicine, you went to a doctor for consulting. If you can collect all the bills, you have to collect all the bills and you have to submit it to the company. In that case, in a year, if you are submitting a bill of 15,000 rupees, then this is a tax-free income. You don't have to pay tax for that. So meaning, if I say 15,000 rupees a year, it comes out to be 1,250 per month. So that means an employee can also pay you a medical reimbursement of 15,000 rupees a year, which means 1,250 rupees per month, right? Second, let's say an employee has opted for, or an employer is paying an LTA. LTA is basically a leave travel allowance. Leave travel allowance is paid to an employee to go for a vacation, and that's the amount. If he spend that money on going for a vacation, then that money paid to the particular person is tax free. This only means the travel allowance and not the hotel accommodation allowance. Getting what I'm saying? It's not paid for like you staying in a hotel, that bill, or sightseeing, etc. We'll talk more about leave travel allowance later, but just for the basic understanding, it is paid for the travel. Now, what should be that amount? There is no capping on that from the government. It can be any amount which an employer can pay you and can be a tax exemption, but there are some rules and regulations. For example, if you are going from, it is only paid for travel in India, should not be travel abroad. And if it is by air, the category, the economic category. If you are going by train, so you have to have a third AC. So these check and balances are kept in place, but there is no limit as such. Like we have a limit of 50,000 a year in medical investment. There is no limit here. So what normally companies does is they make their own policies. And one of the most common policy for LTA is one basic salary. So that means if you have, in our case, the basic salary was 20,000 rupees. So it is 20,000 rupees per year, meaning an employee can spend 20,000 rupees in a year to go for a vacation in India anywhere. So LTA is paid for that. What else? You can have annual bonus. Let's say company says to that particular employee that we will pay you 10% of your gross salary if based on profit. Whatever, there should be some terms and condition. Terms and condition can be as simple as that if our company is profitable, we'll pay you 10% of your gross salary. And in our case, the gross salary was 50,000 rupees, so that means you will be paid 5,000 rupees per month. This is per month. So that comes out to be 60,000 rupees a year. In this case, it was a per annum part. In this case, it is a per month part. If a company is giving you a benefit of medical insurance, or so company can say insurance, that I am spending monthly 2,000 rupees on your insurance part. That can also be a part of your benefits. Company can also say, I am giving you food coupons or Sudaxo coupons for, let's say, while in terms of Sudaxo there is a limit, and in terms of food coupon there is a limit. So what I understand is it should not I think cross more than 6,000 rupees per month to. I'm not very sure about it, but I'm recalling it should not be more than 6,000 rupees per month.
Snacks and meals also.
It is for meals. It is for meal you have. The actual criteria was somewhere around 100 rupees per day or something like
Yes.
that. Per day or something like that. So it is a tax-free income in that way. So anything which company is giving you as a benefit can be given, and every component has a tax angle to it. That, for example, in medical investment, till 15,000 rupees is tax-free. LTA is paid annually. It cannot be paid to you in every month. It will be paid annually, but there is no restriction from the law side. But company makes their own rules and regulations. And normally, the most widely rule is one basic salary a year. Annual bonus based on the profitability or any terms and condition company wish to make, they can make. Insurance part, which is the medical insurance and all this, food and so. We are not going into more detailing of all those. I wish I could, but I will in future sessions of ours. So maybe if I talk about LTA, we can have a good discussion on LTA itself. There are a lot of things in LTA itself. But to go into detailing, we should know the basic framework so that we know what we are talking about and how it's going to impact the whole picture. Now, let me quickly give you a recap, and let's have one by one some example so that you can understand what we have discussed right now. How does it comes out to be in terms of the salary breakup? So let me quickly make one. Assuming we'll take the same example we took earlier. We will create a fixed gross salary of 50,000 rupees. This is an example. So the example we are taking is, let's give somebody a 50,000 rupees gross salary. Now, if we have to give somebody a 50,000 rupees gross salary, how the CTC will look like with different terms and conditions, right? So let's talk about one by one. So one, we'll talk about the basic components. So one is basic, second is HRA, third is our transport allowance, city compensatory allowance, and special allowance. We'll talk about till now here. So let's start putting some figures to it. One, we said basic should be, in our case, basic should be 40%, which comes out to be 20,000. You need to help me in the calculation because there could be some figures. HRA ideally should be 50% of your basic, comes out to be 10,000 rupees. Transport allowance, we said we will only give till 1,600 because this much is only tax exempted. City compensatory allowance, assuming the person is in Delhi and in a grade A, and as per this policy, our policy, no law, our policy, we are supposed to pay him 2,000 rupees. Then whatever is left will be put in, what would be that? Sorry? 16,400. So comes out to be a gross salary of 50,000. We added a twist to it and said this person is also eligible for 5,000 rupees per month incentive. Now, as I said, incentive have multiple definitions and we don't have that much of time, and this is not the topic to discuss today. But for simplicity, we are saying it is 5,000 rupees per month based on his performance to be declared by his manager. If your manager says give 100%, give 100%. So let's say, we'll say performance incentive. And this performance incentive, this is basically a fixed gross. This 50,000 rupees is a fixed gross. When I say fixed gross, meaning it is based on your attendance. Not based on your performance, it is based on your attendance. Fixed incentive or performance incentive, let's say, is 5,000 rupees. Then the gross will be 55,000 rupees. So now this is what I'm calling a gross. And this gross has your variable pay as value to it. Now move ahead and let's talk about what are the various deductions going to happen. So this is your gross salary. Let's talk about deduction part of it. Deduction means employee deductions. So first deduction will be employee provident fund. The second deduction will be employee ESI. And assuming these are the only, we are not in the state. Let's say example of Delhi. Delhi doesn't have Delhi has WF? Delhi doesn't have WF.
Half yearly basis there.
Delhi doesn't have P-tax. So let's not talk about that. So these are the two primary deductions which are going to happen from employee. So simple, we'll take 12% of the basic, and 12% of the basic meaning the 20,000. But our company say in this example, our company is saying cap it to 15,000. Meaning even if the basic is 20,000 rupees, we will give PF on 12% of 12% of basic, which is 15,000. 12% of 15,000, which is 1,800 rupees. Is that okay? Can somebody put the calculator and try to do some calculations? ESI will be 1.75% of gross. What will be that? And gross meaning the fixed gross. Can you just do a calculation if you know? So 1.7% of 50,000 will be.
But in our scenario, that ESI will not applicable.
Yes, I will not be applicable.
Oh yeah, very good. So in this situation, because the gross salary is
More than
there should be 0. So the total deduction will be. So what will be the in-hand salary? If I talk about in-hand salary, let's assume from the variable one, what would be the 53,200 is the in-hand salary of the employee. So you can make you understand that if I give you a gross of 50 fixed gross with the variable of 5,000 rupees, you will get 53,000 rupees 200 in hand. Now let's move to the next part of it, which is what are the employer contributions and benefits which employer is giving to the employer. So let's talk about the contributions part of it now. So let's talk about the first part, which is basically employer PF, which gonna be again the same amount which is there, 1800. Second is ASI, which is gonna be 0 in this case. Then the gratuity. So can you tell me please what will be the 4.81% of 20,000 rupees? So 4.81% of 20,000 rupees gonna be the gratuity. Then the bonus part of it. As he is in Delhi, one. Second, the basic is 20,000 rupees. The basic is 20,000 rupees, which is less than 21,000 rupees, meaning this person falls under bonus. And as an example, we were taking Delhi's minimum wage is 10,000 rupees, so we have to give him 8.33% of 10,000 rupees, which means 833. Sorry,
960.
962 is the gratuity which we have to pay to that particular person, and we have to pay a bonus of this. Is there any other statutory contributions? I'm not.
PFs.
Yeah, we have a PF admin, which is basically 1.15% of basic, which comes out to be
220.
I think it should be 230.
230.
230 rupees.
1.1.
Okay, now let's total this up, and let's say what is the contribution coming from employer. This comes out to be, can you just add this up, all of them? Then
These are the fixed ones. It might be the insurance also.
3825.
we'll put insurance in the benefits.
3825.
3825. So this is the contribution which employer is giving on behalf of employee to the government. Now let's talk about what are the benefits which employee gets from employer. So it depends from company to company. Company might not give any benefits. There are companies who doesn't give any insurance, they don't give any medical reimbursement, they don't give any LTA. That's fine. But if companies are giving, then they should be accounted here. So let's say example wise, first is insurance. So most of the companies give medical and accident insurance, and for this calculation purpose, we can say 2,000 rupees per month is paid, per month only being paid as a insurance. LTA. In our example, we said it should be 1 month basic, but it is per annum. If I divide 20,000 by 12, what will be that figure? That has to be here, because this 20,000 rupees we are paying is every year.
1666.
166 is a per month thing which we are paying. Let's say they are giving food coupons or Sudalso coupons for 3,000 rupees a month to the employee to have food and all that stuff. They might be giving uniform allowance, not allowance, uniform basically to the employee, and I'm saying 1,000 rupees is the cost for that too. We talked about medical reimbursement, and medical reimbursement is given to an employee for looking after his family medical needs, and it is 15,000 rupees a year, which comes out to be 1,250 per month. That something can be given to an employee. Or let's say employer is giving an annual bonus of 60,000 rupees to employee. If something happens, then it is somewhere around 5,000 rupees a month. Similarly, the employer can keep adding whatever benefit that employer is giving to the employee. If I sum this up, it's gonna be 5, 6, 11, 12, 12 and 15.
13916.
This one?
16.
13916.
916, okay. So this is gonna be the situation. Now let's recap this situation one more time. This is the gross salary. 50,000 rupees is the fixed gross salary. We added 5,000 rupees more to it. It comes out to be 55,000 rupees. We try to find out what will be the deductions from it. We come to know that there will be a PF deduction, so that means 1,800 rupees is no ES applicability. So the person will get 53,000 rupees, 53,200 rupees per month in hand with variable. Then we said, okay, what will be the contributions? Employer PF will be the contribution, ESI, gratuity, bonus, PF. This is the amount which employer is giving to government on behalf of employer, or gonna pay back to employee someday. These are the benefits depending upon company to company. They say, okay, we are giving you an insurance, or LD, or food coupon, or uniform. So we adding up. When you add all this, when I say what all this meaning, when you add this gross, this gross, contributions, and these benefits.
72741.
72741 is the CTC of an employer. That's the whole concept. Now it depends upon in your organization what do you do, what you don't do, and all that stuff. So now with that, do you have any questions to ask? And if you guys can see if there is any question from our viewers, we'll be happy to take any. So I think Vinod has asked a question. He said, can you explain more about statutory bonus? Vinod, we did explain about statutory bonus, but what we are saying is we are limiting our discussion only to how the structure look like. Although I understand you wanted to know more about why 8.33% and why not 20%, or what is capping all about, 7,000 or minimum wage. So we will have another session on that specifically to talk about minimum wages. So I'm very sorry, but we'll take it up next time. What else? Yeah, Piyush, as we said, the professional tax is basically depends from state to state, and every state has a different charter. Depending upon what is the gross salary of that particular person, that state decide what is the professional tax to be deducted. So of course, there's going to be a professional tax, but it depends from state to state. In Delhi, there is no professional tax. In UP, there is no professional tax. In Haryana, there is no professional tax. But in Maharashtra, there is a professional tax. Then we need to have a chart for that. What is exactly that professional tax all about? Wasim has a question that how do we decide that what is the TDS to be deducted? Well, Wasim, again we're gonna have a separate session on that. How we're gonna deduct the TDS, because that's gonna be absolutely the same topic. But you must have got some idea from this whole calculation. If you see, there are so many components in this salary which is just being paid to employee to make sure that this tax is not deducted, and it will be less tax deduction. And these all benefits are basically being given by government itself. For example, HRA, depending upon whether you pay a rent or not, the travel allowance is also going to be tax free. What else? The Provident Fund is of course a tax-free component. Gratuity till 10,000 rupees, and I've heard now it has increased to 20,000 rupees, is tax-free. Bonus is taxable, PF admin is tax-free. Insurance, of course, this all benefits because the employer is spending on you, it doesn't come to you as a tax. So this is tax-free, this LT is tax-free. We can talk about it more, but it's a tax-free. Food coupons tax-free. If your employer is paying you something or giving you a uniform, is a tax-free amount. Medical reimbursements are tax-free. Annual bonus is taxable. So we can talk about it, like how exactly the tedious part is been decided, but for this purpose, we're just limited to understanding of how a CTC is made. There are a lot of things to talk about more, but we'll keep it for our next session. Any questions, final questions coming from your side on this? All right. So thank you very much, guys. We'll see you for the next session.